Hey everybody, Gary with Basecamp Trading. Let's take a look at just some simple Renko setups we had today. This is our ES futures chart, and you can see that in the pre-market, the ES made a pretty decent move to the upside. Jerome Powell had some statements that were released, and it was bullish for the market. We had some PPI numbers, and anyhow, prices drove higher. Right in here is where the stock market was actually opening for the U.S. session, pushed higher. But on this push higher, you can see we were making bearish divergence both on our momentum indicator and our VSI indicator. So we pushed higher prices, but lower momentum. So we had some bearish divergence, and we had our down, up, down pattern, which is a bearish chart pattern. The ES pushed lower, and then we put in a pivot right here. If you consider this a pivot area, then this is a lower pivot low. Typically, I don't look at 1 and 2 bar pivots as actual pivots. In my opinion, the previous pivot low was really back here. But if you consider this a pivot, then we had a lower pivot low and breaking the uptrend. If you consider this the previous low, then we just had a pivot, kind of chop sideways, and then we put in a lower high and broke to a lower low. So at this point, we had a lower pivot low. We had broken out of the cloud. We were changing the trend to a downtrend, lower high, lower low. That's the first rule of Renko trading is trend. So we had a downtrend. We broke the cloud, pulled back, made a momentum reset, got all of our moving averages in alignment, had our wick out of the cloud, traded that right down to our midline. See our gravity lines 43.6925. That's our midline, and this bar traded right down there to the tick. So our entry was at 43.75 and a quarter. Midline was 43.69 and a quarter. So you had the potential to pick up, $200-300 per contract, just really depending on how you were trading this. But you had the potential to pick up $200-300 per contract on this initial push down. We made a pullback, made our wick off the 18. The red line is our 18 EMA. We made our wick off the 18, broke through this previous support line, and pushed down to our first target. Our first target was 43.5575. Made a nice push lower down into our first target. Our entry was on our wick off the 18 at 43.70. Right at 43.70 and a quarter. Pushed down to 43.55. So potential to grab, $500-600 per contract, just depending on how you were trading this. We were getting extended at this point. We're extending our VSI, painting dots, showing that the selling volume was starting to dry up. We made our pullback, and then we never really traded lower after that pullback. Made another little push down, filled the gap, and then the ES bounced. We had a similar setup on our crude oil chart. And you can see that on our crude oil chart. Same thing. We were pushing higher, making higher highs, higher lows. Drove our way higher. And then we changed trends, started making lower highs, lower lows. Broke below the cloud, made a pullback, got a momentum reset, had our first wick out of the cloud, made a nice push to the downside, had another wick out of the cloud. This would have been good for $200-300 per contract, again, depending on how you're trading it. Had the opportunity to grab another $100 per contract. Then crude kind of chopped sideways, waiting for the EIA report. EIA was late today. We broke through support, pulled back, set up another wick out of the cloud right here. Our trend was down, lower highs, lower lows, and then we proceeded to push on down further. Our first target was 73.67. Didn't hit the first target here, made the pullback, and then finally came down there and hit our first target. But our wick out of the cloud right there would have had us in somewhere around 74.70. Our first target was down here at 73.67. So depending on how you were trading this, you had the potential to grab $1,000 per contract. If you got out in here, you re-entered on the wick out of the cloud, and actually probably picked up more because you would have been down, you would have been out down in here somewhere at 73.87. So you had $700-800 per contract depending on how you're trading that. Pulled back, entered on the wick out of the cloud. That puts you in at 74.14 or so. Traded down to our first target right there. Had a potential to grab another $400 per contract or so. Started getting extended, making bullish divergence. Chop sideways. We're in a compression channel right here. We had our bag number down here at 73.15 in a compression channel right here. Had another wick out of the cloud, broke underneath our compression channel and traded down into our bag number. So another opportunity to grab another $200 or $300 per contract, just depending on how you're trading that. And crude is just tanking in a huge way today. We actually broke under our bag number just now and pushed lower again. So crude was bearish, and we were able to take advantage of the pushes lower, just trading simple Renko setups.